Hey guys, if you run a service business, consulting practice, or agency, you've probably been told the same advice. Charging by the hour, scale your team, fail fast, and compete on price. But what if almost all of that advice was wrong? In today's episode, guest Joel Miller, you'll learn how he built a 500K plus agency with just two people, him and his brother. And he's been doing it for 17 years. No massive team, no hustle culture burnout, and no race to the bottom on price. In this episode, we break down how a tiny agency can outperform large firms by focusing on value pricing, strategic thinking, and high trust client relationships. Joel explains why hourly billing actually punishes expertise, why your highest paying clients are usually your easiest clients, the surprising sales technique where he actually tries to talk prospects out of working with him, and how AI is making human relationships more valuable, not less. We'll also dive into one of the most controversial ideas for entrepreneurs, why the best investment you can make might not be stocks or real estate, but in your own business, marketing, and in yourself. Later in the episode, Joel shares a simple strategy most companies miss during downturns, one that helped businesses capture massive market share during recessions. So if you're a consultant, entrepreneur, freelancer, or professional trying to earn more without working more hours, this episode will completely change how you think about pricing, growth, and building a profitable business. Now let's get into it. Welcome to the Financial Freedom Podcast. I've got Joel Miller here. He runs a 500K plus agency with just two people. We're going to talk about strategic marketing without the overhead, what he does in his agency. He's been there for 17 years. I'm really happy to have him on. Joel, welcome.
Thank you for having me. My name is Joel Miller. I run and operate the SkyFloor with my identical twin brother, Alan. Yes, we've been in business for 17 years. We recently turned 42 or 10 and a half, depending on how you slice it. We've been in business for that amount of time because our twinship goes longer than the business.
We'll talk about how you built a 500K plus agency with just two people for 17 years. The second is, how do you go into business with family?
Oh, yeah. People always say that, right? Don't go into business with your family, even friends sometimes. It depends on the family. We've never been those types of twins who are like, we got to be as different as we can from each other. And we have to, I can't stand the guy. We've always been best friends. I think it works because we understand how each other think. People always ask, is twin telepathy real? We're like, not really. It's not uncommon for him to text me and then he says, you jerk. I was just about to write back the exact same phrasing you just sent to me. Telepathy isn't real in a metaphysical sense, but it is because we've known each other for so long.
What I love about you is you have several contrarian views. The first is a lot of entrepreneurs, you talk to them, they say fail early, fail often. You say that's destroying your business.
I think it can. If your kid came home and they were struggling with math, would you be like, you need to fail harder and fail faster? I doubt it. That's not good advice. I think you'd help them understand the problem, adjust their approach, and help them plan to succeed. We're giving ourselves the opposite advice, which is very strange. I think it's become a badge of honor, and it feels like people are planning to fail. And like, of course, we're going to face failure, but I think our default orientation should be towards success. Our mindset matters. And we should plan to succeed, but prepare for those setbacks and then stop treating failure like it's a strategy. Because in the end of the day, it gets at the core and we want to learn from our failures, but it's not a strategy. It's not going to help you.
Interesting. Why do you say business in the front, party in the back? Stop taking yourself too seriously.
The business mullet. We've run across so many businesses while we've been doing this that take themselves a little too seriously. It can happen in certain industries. Lawyers come to mind immediately, law firms. It's so stuffy that it feels inhuman. At the end of the day, we like to smile and laugh. Even the stodgiest lawyer likes to do that. I think if you can be a little bit business, if you can have a business in the front, present yourself professionally, but then, you know, when you turn that hair, I want to see the mullet and be like, oh, you're a person who likes to have fun too. You get the joke and we can relate. Like, that helps your business grow because people are attached to you, who you are, and the personality of it, not just the commodity product you produce.
A lot of our audience, they get paid by the hour, like a doctor. Right. You say How do you price services based on value rather than hours? What conversational shifts need to happen with clients?
Hourly billing punishes you for getting better at your job. That's the whole problem. So much of the world operates that way. If you have a traditional agency model, for example, it lives large in your brain because you hire people at an hourly pay. Even if they're salaried, it's going to come down to an hour. You're trying to do all the math based on what you charge the client per hour. Is there enough margin there so that when they're busy, maybe 65% of the time, I'm still making profit on their time? I get why it's baked in, but you're leaving something on the table. If you get really good at something, it takes you a quarter of the time. Do you deserve a quarter of the pay? It's all your experience that got you there, all the expertise. And as we know, you can have it good, fast, or cheap. Doing something fast is valuable. It could be a strategic difference. If you can come to me and I can produce something quickly because I'm an expert at it, does that make it worth less? For a lot of businesses, actually, it makes it worth more. It's just discovering that when you talk to your client, what are you helping them achieve? What's the outcome? Does it have a business return? If it does, you should be pricing based on profitability for them, not just the amount of time it takes.
Along those lines is the race to the bottom, competing on price. What happens when clients say, that's too much, I can't afford it, you're overcharging?
Yeah, we don't have that come up much. A lot of times in the sphere we operate in now, pricing can be a good mechanism to make a project worth it. If you're one of my clients listening, this has never happened to you, I promise. If someone comes along, we're not convinced it's going to be a good fit, but we're still intrigued. We think there might be a little pain in the relationship. We might price it higher than we would normally. We're pricing not just for the work we're doing, but for the trouble we think the relationship might be. Sometimes those people say no and move on. That's fine, because either way, that's why I do that, because it's either I'm going to make it worthwhile for me to deal with what I perceive are going to be some red flags, or they walk away, and that's fine with me. That leads into another big philosophy of ours, which is I love to try to talk people out of working with us. I think it's the most powerful marketing and sales technique you can use. If they've come to you because they understand something about what you offer beyond just the commodity of it. They're not just out there. When people come to us, that's often the case. If I can say, why us? Why are you even talking to me? They're like, wait, what? I thought you're here to pitch me. What happens is they have to defend what they understand about what we offer. Once they're in that boat, they start selling themselves on me. It becomes this really interesting mechanism. I don't think it's pure reverse psychology, but it's in that realm of clarifying the relationship by saying, hey, maybe there's another way you can do this. Maybe we're not the best for you.
I was having lunch with my colleague the other day. We were talking about how do you screen out, we call them leeches. They suck your energy and time away. And he was just like, double your rate and
Exactly.
Either they'll go away or they'll...
It can be an incredible filter. For a while, my wife was a wedding photographer. I helped her spin up that business. There was a season where we had tons of leads coming in, and I was like, time to raise prices. That one's different. We doubled our prices. I'm not kidding to say that it went from a steady stream of leads to crickets, where they were like, now you shouldn't talk to Kate Miller Photography. We halved that increase, and they started trickling back in. The irony is that one day when we finished her business, we were charging 2.5, 3 times as much as that increased price, and we were still getting tons and tons of leads. All that being said, you have to do a little bit of pricing work to make sure you fit your market at the given moment. It's not infinite, but there's a lot more wiggle room without alienating your marketplace than people think.
We were also saying that once you raise your rates and you get clients that pay that rate, they actually become a better experience for both sides. Why is that?
That's a great question, because we've experienced the same exact thing. The clients who've paid us the most, if I look back at the last 17 years, are usually the lowest maintenance clients, which is shocking. You'd think those are going to be the people who demand the most. In a sense, they demand the most, but they're also confident in their decision. They understand that good work costs good money. So they're not sitting around looking to babysit you. They paid the real price for someone they don't have to do that with. There's a mindset in the lower end that the people who come and price shop at that level are usually scared of spending money. They live off of an entire fear scarcity mindset that travels into their relationships too. They're going to be fearful, act like good work is scarce, hard to come by. So they have to micromanage you. They have to be the one to make sure the output's good. At the high end, the trust is there.
Quick pause here. If this episode is making you rethink how your income is structured, that's intentional. Information doesn't create freedom, structure does. At the end of this episode, I'm going to show you how to diagnose whether you're building leverage or just scaling complexity. Let's get back into it. What's the secret to running a 500K plus agency with just 2 people for 17 years?
First and foremost, it is value pricing. We could not do those numbers with just 2 people if we weren't able to prove that we provide real value to clients. We wouldn't be able to do it and not be working 24/7. I think there's room to grow still for us. It's focusing on the value we provide, the outcomes and the problems we can solve. So we want to be in a strategic relationship with our clients. I think that produces long-term relationships. The value goes up. It produces trust that allows us to have wiggle room because we're not sitting there checking off a box of deliverables. It's what do we need to do this month to help you achieve your goal? The secondary thing is tools. I'm always on the hunt for tools that make our work easier, more efficient. Our overhead's extremely low. If I can find something that I have to pay $300 for, $500 for a period, even if it's a monthly thing, and I know it shaves 20 hours off the work it takes to do the thing, that's well worth it. Finding those tools that help your efficiency is key. And if it makes you more efficient, then buying the tool is a no-brainer because you can do the math. The tool isn't good if you bill by the hour because now you're in the position where that took me a quarter of the time. So now I make a quarter of the money and then cannibalized more of my profit by buying the thing. We don't want those perverse incentives. We want to do good work and be efficient for our clients.
On the subject of AI, we were talking about the race
Yeah.
to the bottom. AI is commoditizing all of and making it very cheap. You're using AI to do with just 2 people. How are you reconciling this dichotomy between cheaper prices and increased productivity?
AI definitely threatening to commoditize a lot of elements, and the democratization of content creation is making the ideas and who they're attached to matters more than ever. That's always been our strong point in our business. It's partnership. People come to us because we're honest. We have good ideas. We can synthesize all kinds of ideas into new outputs for them that help them achieve their goals. Yes, AI does some of those things, but nothing like them coming to SkyFloor and being like, what should we do next? How are we going to execute that? If I go ask an AI about that, I'm not turning that result over to them. There's still the human layer of me. And that's the part that has the trust. They're never going to turn to the AI for that same relationship because it inherently can't have it. It's just a computer. I can go to Claude, ChatGPT, ask a question, get a pretty good answer. If I'm scrolling through LinkedIn, my favorite person's Substack, they come up with the same topic, I'm paying 3 times attention because they say it and I trust them. It's scary, but more exciting than ever before. People who can forge those relationships and partnerships, you bring your personality, we're going to be successful. We have to pivot sometimes how we're doing that.
So you say run your business like you potty train a toddler.
Any parents out there know that the potty training experience is a magical time. No. It's tough. You have a goal in our business. The goal with potty training is we need them to start going into the toilet. There's a lot of reasons it saves on diaper costs. It's good for the household. Your next goal is good for your business. You're going to have successes, move forward and progress towards those goals. There's also going to be accidents. And you're going to wonder, will it ever work? There's going to be points of near despair. Can I hit that level that I want to? But you keep going just like we do with our toddlers. A lot of times our businesses are like a belligerent little toddler who has the tantrum on the ground and you're like, all right, new approach. I still need to get to this end thing that I want. So I'm going to have to be adaptable. I'm going to have to learn from failures. In the end, we're going to get there. We were potty training one of our kids. We have two kids. And I was like, this feels so much like operating the business sometimes. Luckily, those goals in our business are long past. It's an awkward teenager now.
What is bro marketing mythology?
I think to me, and I take offense to this, given our 2-person team size, that it is the scale or die. It's to build this thing that we read all the Forbes Business Insider articles about, the 25 under who are worth $1 billion, whatever. Like you go, I haven't done that. I'm already past those ages. I failed. I'm done. It's just that like ethos of everything's about how rich you can get, how fast. And I'm like, no, people over profits every time. I want to be profitable. I want to have a nice life and provide for my family and leave something for them and help people. That's the key at the end. I want to help people. I want to help our clients. I want to approach relationships as a person and not just people or $ profit marks available for me.
Among the audience, a lot of them are W-2 or 1099. They have an income and to stock away for the future. They invest in real estate as stocks. You talk about the biggest ROI is investing in your business, marketing in themselves, more ROI than, say, for example, the stock market or real estate.
I always say to people, I think not everyone can be an entrepreneur. I used to think that was possible. That is definitely not possible. We all meet people who are, you're like, yes, if you tried to manage all the aspects of this, you would, it's just not going to work. But I now say everyone who can be, should be an entrepreneur. And it can look at how you invest looks different in different seasons. We've had some years where we've grown 20, 25% on the bottom line. There's no place you're going to get that kind of raise or that kind of return on your investment. Don't throw your money away. But if you're looking at your business and there's something you need to do and spend some money on, it might be better turning that around and throwing it into your business than it is to put in the stock market. If you could do a 25 or 50% year-over-year growth with your stocks, we would all do that. But it actually is possible. If you can produce some new layer of value and find the right people who are going to come along with you and invest in that and buy that from you, then you have this chance to have a return that is simply impossible in other investment vehicles.
I was listening to a podcast the other day and they were talking about, for example, getting to 100,000.
Right.
Basically, it was like you save 275 a day for a year. And then they were comparing the different, like you do a 5%, a CD, you save it, you put in the stock market or real estate. The highest ROI was marketing, investing in yourself and in your business. You can get astronomical rates if you're successful. You can fail too.
That's true. I want to piggyback on that idea. Another favorite idea of mine is to treat marketing spend on your business the way that I think treat your investment portfolio, which is called dollar cost averaging. You put in a set amount on a schedule, whether the market's up or down, take the emotion out of it. It's a strategy you execute. What we've seen is that whenever there's a downturn in an industry or widely economically, like 2008, the businesses who didn't pull back their marketing, there were opportunities that others missed because they cut that from the spreadsheet and captured more market because they didn't do the scared thing, the logical thing, which is we need to cut one of the softer expenses. Maybe marketing is that. There's less competition in the Google Ads space during that time. There's more chances to reach more people and set yourself up for that next upturn because it doesn't go down forever, and capture more market share. Be disciplined about your marketing spend and follow that just like you would if you were dollar cost averaging your stocks.
My colleague, she was saying that the best times when you have downturn like COVID or 2008, right, that's the time you need to invest more dollars in marketing and advertising. And the same thing goes with dollar costs. Those times you want to capture more.
It might make sense to add a little more because you can see value. There's value there because we know that it doesn't always go all the way down. It doesn't always go up constantly. That's the cycle of markets. Take advantage in your marketplace for your business. And when it goes down, save a little rainy day fund and say, all right, we're going to actually, as other people are pulling back, we're adding 20%. We're going to capture more market share.
How can people connect with you and learn more from you?
They can head to our website, theskyfloor.com. There's also a thing called website readiness or website ready. If you navigate around the site, you'll see it. We've got a PDF that you can download. It helps you figure out what you need for a website project. You can bring that anywhere you want, not just to us. It's a freebie.
Thanks so much for coming on, and really enjoyed talking with you.
I enjoyed talking with you. Thank you again for having me.
Let's zoom out. If you're a physician, founder, or high-income professional, and you feel like you're working harder every year, but not structurally freer, you're not alone. The mistake isn't effort, it's architecture. This show exists to help you convert expertise into scalable leverage, faster and with fewer expensive missteps. Here's the diagnostic I mentioned before. If your income requires your constant presence, if your capital isn't compounding outside your profession, if your highest value talent is doing low value tasks, you don't have a growth problem, you have a leverage design problem. And if you want to fix it with clarity instead of guesswork, I offer a limited number of one-on-one leverage strategy sessions each month. We audit your income model, capital deployment, authority positioning, and structural bottlenecks, and design your highest return move. If you're serious about compressing years into months, the link to apply is below.